What is going on YouTube? It's Sankey. We're back with another one. Alright guys, I'm coming at you with a play I'm looking to pick up in the markets. Now it's a penny stock play. You guys know every now and then we like to blow off some steam in the market with these penny stock plays. Just have a bit of fun with them. Got to remember, keep the majority of your portfolio in our growth plays. I gave you guys a ton over the weekend, put some more on your radar yesterday, and I'm coming back with some more tonight. It's the best way to build wealth in the stock market. Now with this play, I'm only looking to chuck a couple of $100s at it, and that's a very small portion compared to my overall YouTube portfolio. Also with these penny stock plays, whatever you invest, be comfortable fluctuating in the short term because these penny stocks can bring the heat. Also, with the penny stocks, remember to set your stop limits. So if there's any downwards volatility, it can cash out and you can move to the next one. Now before I get to it, I'm going to need you guys to hit that like button for me. And if you're new, hit the subscribe button during the journey. Without further ado, let's jump into the play. Up on screen, that's Sharing Services Global, ticker symbol SHRG. This is a holding company that go out there and acquire different businesses, looking to take on minority positions all the way up to 100%. Now they focus on those companies that specialize in direct selling in the fields of medical, travel, technology, insurance, health and wellness. Now I like this because they're diversified in what they do. They've got a lot of different avenues they can explore to grow their business. I always say I'm looking for those plays that have that large total addressable market because it gives them a lot of room to keep on growing, and this play is ticking that box. Now once Sharing has invested into a company, what they do is they add management expertise, merchant processing, admin services, and a lot more to help that business run better. Now what you guys must know is we've got another undervalued play on our hands here. 2020 revenue came in at around 130 million. This is a 50% increase year on year, but their market cap stands at sub $100 million. You guys know we like those undervalued plays because not only should we expect share price growth from them building their business and growing, but also from investors repricing up that share price when they realize it's undervalued. Like an IQST, like a GMBL, a couple other plays that I put in your radar that were undervalued, and we saw good increases in that stock price. And they're also net income positive, which shows that they're managing their costs and operating their business efficiently. When you guys are out there investing into plays, ensure that these plays are generating revenue and the lead time to creating revenue is not too far into the future. You want to also make sure they've got a clear path to profitability. Now Sharing have recently received a $30 million investment from a company called DSS, and they're going to use these funds to grow and scale their business in Asia, targeting markets like South Korea, China and Hong Kong, and looking to roll out their service over the next coming months. And as they do so, they should increase their revenues and should feed back into a higher share price. And if we look at the charts, you can see that this play has been consolidating for a while, and it's only recently that it's starting to pick up steam and momentum as the investors are starting to realize this is an undervalued play with a lot of potential. Strike price on this one is under 40 cents. Catch them under 40 cents. Join us and load up on this one. Alright guys, let's talk about how we can level up as investors. Now one of my patrons yesterday was talking about the different types of plays. So as you guys are out there building and constructing your portfolios, I want to make sure you guys are clear on the three types of plays and how to identify them. Because we've got growth plays, we've got value plays, and we've got penny stock plays. Now your growth play, that's going to be one with good earnings and revenue potential, which is above average. Now they've often got a product or a service which is different in the market, which can lead to continual years of growth, and they're often expensive. Now I like to look at these growth plays as above 500 million in market cap. Now your value play, they're going to be less expensive, they're going to be more established, they're going to be larger players, and they're going to grow slower than your growth plays. And your penny stock plays, they'll be under $5. You'll find a lot of them on the OTC, but you can also find them on the New York Stock Exchange. Now, these will be plays that are more risky, more volatile, and I like to look at penny stock plays that's under $250 million in market cap. So as you guys move forward and build out your portfolios, think about the combination of growth plays, value plays, and penny stock plays you've got within the portfolio. Alright guys, been rocking with the channel, you know what time it is. Question comes from Philip, says, you have a lot of great evaluations on growth stocks, but what are your favorite value stocks to buy during the pullback? For me personally, Nike and Adobe has proven quite resistant to these worries in the market. And how do you stand in the Cathie Woods versus Michael Burry Tesla fight? Are we closer to $100 or $1,400? So this is a great question, so thanks for sending it in. Now you mentioned Nike and Adobe, those are two great value plays to add in the portfolio. Now I've gone over Nike, we've got them in the portfolio, that's a good play. Adobe's one I haven't mentioned, but this is a solid growth play. If you put your money in Adobe, they'll be generating you returns for years to come. Now I know I've got two more value plays I want to put on your radar. The first, that's Wells Fargo. And this is a play that is going to jump up to the $50 range. It's only a matter of time with this one. So this is a solid play to add to the portfolio and give you guys that diversification and exposure to some more value plays. Another one I want to put on your radar, that's Citibank. Again, this is a play that can jump up to $80. Right now, they're trading below their tangible book value. It's only a matter of time before they're priced up. Now, in terms of where I stand with Tesla, I think this is a great growth play and they're a good addition to the portfolio. They're one of my largest holdings. They've got a lot of untapped potential to be unleashed. Now, we know they're set to grow around 50% year on year. So it's a high growth rate. I would say we're targeting those plays that are looking to grow at least 30%. And once they jump into commercial vehicles, if they move into insurance, into robo-taxis, this gives them a lot of different avenues to continue growing. And we know the EV revolution is just getting started. There's going to be more and more cars transferring over from gas to electric. Alright guys, that wraps things up. Do hit the like button for me, helps the channel out. If you're new, hit the subscribe button, join the journey. Also check out a link down below to the Patreon where you can get access to our Discord and join our team of investors over there and enter into some additional plays with us. As I always say, check into the channel each and every day. Stock market's rapidly moving. And I'll catch you guys in the next one.